All right. So, it's an amazing time with you guys again, right? So, if you have been following, I will just have a quick recap on some of the summaries of things we have done so far, right? Like the basics of training so far. And for the freshers and someone that is just coming up who is just trying to understand some certain things and even to refresh our own mind as well, who are already, trading a little. Remember, the basics to Forex market is the market structure. Right, market structure. And I've made this clear. When you want to understand the market structure, there are three kinds of structures. Right, we have the bullish structure, the bearish structure, and the ranging structure. And you understand that we have when market is moving up in a sequence of higher highs, higher lows, like this, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. We call this kind of a what structure, a bullish structure. And when we have series of lower low, lower high, lower low, lower high, lower low, lower high, lower low, we call all of this series as what a bearish structure. And then when we have a place where market is moving, in a sideways manner, and it is not really either up or it's not really down, it's just, giving us all of those zigzags and stuff like that, then we can call all of this a ranging market, right? So when you are I'm sending this now for clarity so that when you are marking out, you see, when I send you guys, I tell you guys to run an assignment and do markups, marking up maybe a chart and then indicating your structure, if it's a bullish structure or a bearish structure. You don't really have to just come and then mark out maybe market did one higher, higher, low, higher, high like this, and then you just mark it and then this bearish, and then when you do this and look through the market. Right. Look at the sequence at which the market has moved. Give us a clear structure. Give us a clear structure. Right. If it's bullish, if it's bearish, let your marking, don't just come and then you see the market did this one. They came here, came here, came here, and then you say this is a sell because you are saying low, lower, high, lower, low. If this is a sell, you see market came back up, pushed back up, came back down, did all of this again, came back up, came back down, and it can, like that. It can just be doing all of this and, so you need to look at, so even if you're looking at this market, we can literally look at this now, even though we have, look at this, look at range, inside structure. All of this now, they are what? All of these are like ranges, but look at this over. Let me now show you. Look at this structure now. Look at the way this structure now comes out. A high, a low, a high, a low. Did you see that? Maybe this now came to really take out this high, give us a high here, and then maybe now comes. Then we can now clearly say, oh, this is what? This is a bearish market. But inside of that bearish market, we could see that there was a form of range here because market was not so clear here. Inside of this same bearish market, right, we could see a little buy push up here, higher high, higher low, higher high, higher low, higher high. So it is just all of this is just to help you train your eyes to see the market. So when you are doing markups, assignment like that, you're doing your markup for on the chart, it's to help you train your eyes because when you don't understand those things, when you come to the chart, how then do you want to know what to do? Right. So that is that about that. Basic market structure where we have the lower lows, lower lows, lower high, lower lows, lower highs, lower lows. And then the bullish where we have higher low, higher low, higher high, higher low, higher high. And these are like the major thing that captures our mind. The ranging market is not really something we pay much attention to. We are just aware of or informed about it just when we see it in happening in the market, right? But where we want to capitalize on is the bullish or the bearish market. That is what one can apply us to know whether to buy or to sell. And the ranging also for us to know when to stay away from the market. Right. So this is like the basic market structure. And then I taught you about the advanced market structure where, if market is bullish and it's giving us series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. If market was just all of this, in that direction, it would be easier for everybody to make money, like I've said. But then the reason why it looks so complicated is because maybe you feel like, let me just come to this point and then I just want market to come back here and then buy, right? And instead of market doing that, you see market now do something like this, comes, take out this low, and then did what? now buy. I'm like, why did you now market? Market took me out. That's why I now went to buy. Yes, it was true that you were right on your direction, right? You were right as to the direction that the market is bullish, but the point of entry was not correct. And what made that happen? That is where the case of advanced market structure comes in. Because in this case, one of the things that the market movers do is that market moves based on what? Money, based on liquidity. And I told you, what is liquidity? Liquidity is where money is rested. It means that when you see market move up and down, it is not just moving up and down like a swing or something. What is making market move to the upside and to the downside and all of this is the contributions of the buyers and the sellers, people that are putting in money. Some persons pumped in money into market to push it down. Some persons, pumped in money to push it, to push it up. Some persons pumped money into it to do what? Push it down. So if the people who pump money to make market go are more than the people that are pushing market down, market will definitely rise up because the forces that are pushing it up is more. And then when you see it comes, it means that the forces that are bringing it down is more. Right. If it goes up again, the people that are putting more money is up, right? So if you look at it from that perspective now, we now know that every move you see in the market is money moved, right? It is not just random. It's not just some funny thing. It is money moved, right? So it means that money is what is pumping it. And the reason why most times you would want to like trade maybe the advanced and the basic market structure, and then you expect, oh, market is now here. Let it come down to this point, and then I will buy. And instead of it now buying, right, the market now decide to do what? You know, and of course, when you wanted to buy from here, right, you had your entry somewhere here, you had your stop loss here. What are you trading inside the market? It's not your money. Maybe you funded $5, $10, $20 in the market, right? And then you're let me put this $5 here. So I'm entering here with my $5. I'm putting my stop loss here. So if I risk $5 here, I will make $20 if the market comes to this point, right? You are putting in your money too. That's it, right? So the same way you are putting your money to make the market buy, it's the same way some people, some bigger companies, some bigger institutions are also pumping the market and making the market move, right? So when you put your money here, it means that when the market takes you out, your money is gone. Where did your money go to? Your money is gone to the market because it doesn't go back into your bank account. It is gone. It is wiped. It has gone in. So when you see your account go back to zero, what happened to the account? The account, the money in the account has been wiped because the money has gone into the market. Right. So that's exactly what is happening. So when those orders comes and then your money goes and it is being taken out, remember and note, it is not only you that is placing, we have maybe millions of people that are placing order the same place you are placing and putting their stop loss the same place you are putting your stop loss. And when market movers have been able to take out all of this and the money you are risking, like where your stop loss is, which is like your money that is gone before that move, is called what? Liquidity. So what market is doing is that market wants to liquidate people. It's buying, yes, but they need to push up the more. So the sellers, as they are pushing it down, the buyers are like, okay, you know what? Let them keep pushing. Let them push to this point, and then we can take out all the buyers that are here, all the people that want to buy from here. We can then use all the money we've gathered here, gather enough momentum so that we can be able to, push more to the upside. Right. So if you understand from this concept now, you begin to understand why sometimes stop loss can be taken before your bias is respected. And that is what brought about the advanced market structure, which brings us to having to understand liquidity, where money is resting, right? Where people are literally. So when we see, structures like this, bullish structure like this, sometimes we say, we don't want to place our stop loss here. That is the place we are, people are putting their stop losses where we want to now put our entry, right? Because we know that with the behaviors of the market movers, they want to still, the market is bullish. So for them to keep going bullish, they need to be able to take in some more, absorb some more money to keep having enough energy to move, right? Just like you are climbing up a stairs. Imagine you are climbing up a stairs and the stairs is so much and you are taking enough stress, energy to climb up the stairs. There's a way that by the time you are climbing up, maybe maybe you've eaten, let's say 20 kg or 30 kg. By the time you are moving up, your energy level is what? Is reducing. And you still need to go up more. So if your energy level is reducing, you need to get to a point where you like, re-energize. By the time you get here, maybe you're already on 5 kg. Your energy don't reduce. So you need to, reestablish a little more energy, gain more energy to do what? To keep moving. So if they are bullish, they can't just keep being bullish. The energy will probably be dropping, right? So they need to gain more energy. How would they do that? They need to take out some liquidity to be able to gain more momentum, which is why sometimes you see them take out this and then they move. And then this liquidity they take is what we refer to as the inducement. The inducement liquidity. They induce people who want to join them in the buying year. Early buyers, they induce them, then come into something inside of this region, and boom, they continue. And in the same applies to a sell scenarios, not just only buys. So in the sell scenarios, you can just apply the same principles I've explained into a sell scenarios as to why it can just come instead of maybe coming to this region and then sell. They would not do that. Rather, they will do what? They will come take out this place into some region here, and then they will finally do what? Sell to the downside. I hope that is clear enough. Right. So that is basically it. I would want you guys to, just keep, revisiting this recordings, videos, even after we are done. And if you have questions, you can always, ask. And it is because of that is what has transpired into how we trade. And I've told you guys, how I trade. So for a recap, as to what we do when we are trading, let's have a quick recap on that also. Remember, I told you we are just trying to keep the system very, very, very simple. Very, very, very simple. Is it 100%? No. Are we going to be taking losses? Yes. Are we going to be taking profits? Yes. So, having a simple and very logical style of trading, following simple instructions and rules, with a consistency, we can be very, very profitable. And what do we do? I told you, coming to the higher time frame. And on the higher time frame, what do you want to see? We are very more important, more sold on candle closure. Candle closure. Remember, I taught you guys already about candle anatomy, right? The highs, the lows, the open and the close of a candle, right? So if you don't, you can always, go back to the recording, and study it about how the market opens, where, when the candle opens, maybe it wants to be bearish, candle opens here, and then you see it maybe buys up, then it gives you a wick down, and then finally it comes and then it closes, right? And if it's going to be bullish, you can see it just open, then it goes down first, then later it begins to buy up again, giving you a wick, and then it moves up, and then before it closes, you see it come down and then closed, right? So this is like the candle anatomy. And when candle closes that way, it is not just random. Every candle you see is not just random. The closure of a candle also is an information, is giving us an indication as to something. How is candle closing? Right. So maybe I will use so let's use the last week trade, the GBP USD trade, as a case study. Right. Let's use it as a case study to this, and then we can just do that as our last week recap. Right. So we are in a new month already, which is month of June. Right. So let me delete all of this. The month of June. So um what sponsored why we bought on GU? Why did we buy on GU? That was what we want to look at now. So look at this now. As at this is June currently for me, right? This was the last monthly time frame. This was the month of May, right? So look at May. Prior to May, April. See what April did. April came to, you see this key level. Market came to this A-shape. Remember, I have levels. A-shape key levels. Market came into A-shape key levels, closed below, right? And then the next month that came, what did he do? Market came, opened here. After this guy closed here, then this guy opened here, sold down at first, and then he do what? Went up and then closed here. And immediately we closed, what did you see? We saw um May closing bullish, and it closed above um the previous month. So immediately we saw this closure, how the last month closed. We're like, okay, we could be looking for more bullish opportunity on GU. So immediately we saw that. What did we do? We went straight to the weekly time frame. And on the weekly time frame, coming to the line chart, we saw what? We saw a breakout. We saw a breakout on the weekly time frame. So immediately we saw this breakout on the weekly time frame. Not just this breakout alone, we also had this breakout here as well. Right. Immediately we saw this breakout on this weekly time frame. Like, okay, this is also giving us an indication that what we look into as a buyers on the monthly is getting solidified. And then what do we do? Come to the daily time frame. And what are we looking at for the daily time frame? We are looking out for a sweep and a break. A sweep and a break. What did we have here? Look at the most recent. What did you see? We saw a sweep and a break. So these things, that is the reason why we like using line chart a lot, because it gives us clear. We saw a sweep, a break, not just a break here. We had another break on the upside here. So immediately we saw that, we are like, okay, all of this attests to the fact that we can be bullish. So we began to, sighting for entry, sighting in for entry. So immediately we are seeing all of those bullish opportunity. You're like, okay, 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 okay. How then do we engage in buy? So um we are seeing all of the market playing out, and since we already had our bias as to a bullish, so we are a bullish bias. What we are trying to engage in, or what we are trying to settle in for now, is how do we engage or join into a buy. So if we begin to study this, looking for entries on the 4-hour time frame, immediately I saw this A-shaped key level that got respected like 1, 2, 3, 4 times. The market respected it here. And what did market? The market came back into it, tapped into it, and did what? Closed above the first time, tapped into it the second time, closed above the second time. And after giving us that closure the second time, the next candle that came to it was this sell candle. Look at this sell candle that happened here. The sell candle happened here. It didn't come back into this V-shaped key level. It just came. So we just say, this guy is an inducement. And then we had this V-shaped key level as a potential place where market to come into, to keep giving us that buy to the upside. And going up, we know that this is going to be like our first TP, right? Even though we know that the overall TP is going to be up here, right? So we had this here. Market came, tapped into this V-shaped key level. You see, if you come to line chart, you see the V-shaped key level. And after it came into that V-shaped key level, we did closed above. On closing above again, what did it do again? If you move to line chart, we have what? A V-shaped key level that was resting here. And this V-shaped key level, what did it do again? You see, a sweep and a break. A sweep and a break. Immediately we saw that, what the market do? Came back, tapped into it again. Look at this guy, tapped into, and then pumps to the upside. Until this guy was taken. All of that was taken. Right. So immediately, I know that was how we were able to, capitalize and then, join into the old buys that we enjoyed in the previous week. Right. So that's like a short recap or how we trade the foreign exchange market. Look at this other opportunity that we saw here. Immediately market came, swept this guy and closed above here. Market did what again? We traced back. Did you remember? So for the second entry I sent to my group guys, this was what I saw. Immediately the market came. You remember this was the first entry we caught here. You remember we caught this first entry here, to this point. And this was the first TP, and we had our overall TP, line up here, right? So immediately I saw that happen, and then we're already buying, and we had all of this push up, and we've not gotten it. Our market was retracing it. Why is this guy, like, why didn't market want to come into this guy because of this whole potential, and like this um volatility, like this pump buy to the upside. So then immediately I was investigating it. I was like, okay, let's see what's happening, because The monthly is giving us a bullish bias. Why are we having, all of this? Like, okay, let's see. So immediately I saw this guy closed. What did I see? Look at this A-shaped key level first that got represented by this guy. After it was disrespected, because remember, we don't want to trade following the rule of what? Following the rule of advanced market structure. We just don't want to trade higher low, higher low. We want to always look for an opportunity where there will be an inducement, there will be something in that structure, right? That market can come and take before we join in the direction we want to go, right? We just don't want to enter and know, bang, 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 just enter fast and, want to join the market. No, because we know that markets will always want to seek liquidity. We always want to look for a place to capture money before it will continue in the direction we have, anticipated it to go, or we anticipate that it will go, right? So if it's going to capture, what will it always capture? It always capture what? Liquidity, right? And because of that reason, that was why we saw this. Immediately I saw this pump up, I was like, okay, we are bullish, but what is happening? So I saw this, then I saw this next 4-hour candle closure. And what did it do? This next 4-hour candle closure was what? Just inside of this previous bullish candle. Look at the high of it, look at the low of it. And after all of that had happened, close to it, next to the look at this guy became the interested liquidity I wanted to see. But I was like, okay, if this guy could not come, and keep buying up, and then it came back down, what is he trying to seek? There is what we call a single candle liquidity formation, and that was what I saw here. And right below it, I was seeing. Remember our three kinds of structures: the A-shape structure, if you remember clearly. I have spoken about this, so I won't. Today is not the whole lecture; it's just a recap on our previous week trade, right? So if you remember, I spoke about the A-shaped key level, the V-shaped key level, and then the open close key level, right? And just below this guy, what did we see? We saw that open close key level. Look at that. Market tapped into it, and then it began to rise up. And that was where I saw, I saw that entry, right? That open close key level here. And and if you looked at the markup, that was what we had till all of these guys were taken. And then after we took out this external, what did market do? Market began to reverse. And if we are still going to be bullish for the month, now that we have taken out external, market can reverse into what? Something internal. So to get something internal again, let's see, maybe we can even see something interesting that we might look into in the coming week. Let me see. Let's go back to weekly. We'll just see something quick there. Right. So it's possible that market can come back after taking out external. External has been swept on monthly or weekly. External sweep. And what did it do after sweeping this place? Market did what? Closed below. Look at you. Oh God. Christ. What did market do? Market closed below. I want to remove all of those drawings. Market closed below on weekly. Swept this external last week liquidity, swept it and closed below. So it's possible to see some sell for the coming week, to see this guy go. And if this guy is going to be going, where will market want to come into to continue buying if we are bullish? A-shaped key level that has been what? Disrespected multiple times. They pumped above, gave us this guy, and then so for this all of the month, if we can catch a sell in this week into this place, then we can what? Catch a buy from here to the upside. So that is the recap, guys. So hopefully we want to see some sell for this coming week and to this region, and then more buys to the upside on GBP USD. Right. So that's it for today. I hope you guys learned a lot. See you another time. Make sure you study, study, and study. All right.